Hey guys, welcome back to Valareso Capital. On this week's video, we're gonna go through the market update. We're gonna take a look at what the price action is trying to tell us for the upcoming week of January. Now that we also have the monthly expiration week out of the way, I think we're gonna see a little bit more of a clear action and probably a continuation to the upside in the indexes. So if you want to know what are the levels that I'm going to be watching for the SPY, IWM, QQQ, make sure to stick all the way to the end. So welcome back guys to the channel. If you haven't done that already, remember to like and subscribe, and also to share this video with some other fellow traders, also to members of your family, friends, so that more people can use this information as an asset for their trading analysis and their trading business. So let's just jump directly into the charts. I have a lot to show you. We are going to start here with a chart of the Nasdaq Composite, and what is interesting about this chart is that the indicator that I have on the bottom of the chart is the net highs over the net lows of the Nasdaq Composite specifically, and this indicator was developed by Matt Caruso. So what is this indicator trying to tell us? This indicator basically calculates the companies going into new 52-week highs and new 52-week lows. Then it gets the net value of the companies and give us a little bit of information of what is actually the market breadth below the surface of the price action that we actually see in the index. So basically, just as a summary, if we see green bars in the chart like the ones that we have right here, that means that there are more companies making new 52-week highs in comparison from when we get red bars. That means that more companies are making new 52-week lows. So what is exactly that trying to tell us? That is trying to tell us that there's more market participants paying for new 52-week highs, meaning that is a positive, that we have a positive expectation for a continuation in higher prices from the market that we're seeing. So as you can see right here, whenever we get 3 bars of positive market breadth, we start to get this background green. That means that we're starting to see some kind of a trend in the market. And you can see, and what I want you to notice here is that the last time that we actually went above the moving averages, when it was right here, we didn't have much continuation. We didn't see much follow through from under the surface in most of the stocks that trade in the Nasdaq Composite. So this was basically telling us that we had a bearish divergence, meaning that price was slightly going up, but most of the companies below the surface were actually going down, and that is what caused the market to break to the downside, right? That was one of the reasons that caused that. However, now we're seeing a little bit more participation from other names in the indexes. That means that investors and traders alike, they're looking for a continuation to the upside in the indexes and in the market in general. So you can see it right here. So this basically just increased the probability of a continuation higher. And this was something that we were speaking in the Twitter community. If you haven't done that, also follow me on my Twitter community at Valareso Capital. We were talking about this level right here that we test on Thursday as a high probability level of support. So you can see that we were coming back into that 21 exponential moving average, and historically, when we start to see some continuation in the indexes, that level tends to serve as support. And if we go just a little bit back all the way to July 2022, we actually saw some really similar price action. You can see right here that we had a pullback into that 21 exponential moving average while seeing a lot of continuation in the new 52-week highs over 52-week lows. So that basically led to a really nice sustained tradable rally to the upside. So now we're starting to see a little bit of the same thing, right? Remember that patterns tend to repeat themselves, right? So that's really, really important to understand. So now what is the expectation, right? The expectation is for us to at least test this declining 200 daily moving average in the Nasdaq Composite. And it's really easy to measure how how that is going to be a very high probability event, because we actually just have to go and expect that the low that we make on Thursday is not broken, right? So as long as we continue to hold this low that we make on Thursday last week, then the probability of us hitting this level is actually pretty high. So that's something that we have to consider. And some other thing that I also want to take a look at is going to be this MMTH indicator. The MMTH indicator in TradingView basically just is telling us what is the percentage of stocks that are trading above their 200 daily moving averages. And basically the number that we have right here is 52. That means that somewhere around 52.30% of stocks are trading above their respective 200 daily moving average. And what is really interesting is that we also tend to see patterns in this indicator. So you can basically see that we have kind of a cup and a handle here, right? And we're starting to see that breakout to the upside in this indicator. So that's actually telling us that there's a lot of positive bullish market breadth in the indexes as they're trading right now. So that's actually pretty important. You can see that we actually also had a squeeze that is firing to the upside, and you can see that this is finding some support at the 8 exponential moving average. So it's actually pretty interesting to see how accurate are all these indicators that I frequently use also in instruments like the MMTH. So this is actually also showing us that we have positive market breadth that is participating right now in the market. So those are two reasons what I think that we're going to continue to see more upside in the market. And if I'm going to give you one more reason, it's going to be this indicator right here. Well, basically this is not an indicator, but this is basically the index. This is basically the calculation of the interest rates made by Bank of America. And as you can see, this is also a chartable chart. And you can see that the interest rates are actually breaking to the downside, and we're trading below that 200 daily moving average. And also you can see that my indicators are suggesting more downside here. So as we continue to see more downside in the interest rates, and we can confirm that by the price action in the TNX, this chart right here, you can see that we have a higher probability of a continuation to the downside in interest rates, and that is going to be basically positive for a continuation to the upside in the indexes. So let's just talk about a little bit about TNX right here, because I think this is actually a pretty important chart. You can see that I do have an alert active somewhere around this 1272 extension, and this 1272 extension is basically measured from this low right here all the way to this high right here, and I'm looking for a continuation to the upside to test this 200 daily moving average that we have below. And if we continue to see more upside in this instrument, I'm expecting that we're gonna continue to see more strength as the strength that we saw on Friday in basically most of the sectors of the market, right? So I think that's something really, really important to consider going into next week. So those are basically 4 reasons what I think that we're going to continue to see more upside in the indexes. And now, as I told you, we're going to take a look at some of the very important levels of the SPY, IWM, and QQQ. So let's take a look here right at the SPY, right? So what is really, really interesting is that we were talking about this level as an important level of support. We talk about that in the video that I usually make on Mondays when we go through some of the setups that I'm watching for the week. So make sure to watch that video. I'm gonna have a link in the description, and of course it should be popping out right now in the screen. So what is really interesting is that we were talking about the 50 daily moving average acting as a possible level of resistance, as a possible level of support, and most basically we were talking about 390 as a possible level of support for the SPY. And that's actually what we saw, right? We were talking about the SPY being extended all the way to that 0618 extension, a retracement measured from this high to this low right here, and we were talking about the probability of those levels acting as resistance. And also you can see that we also had that 200 daily moving average. And what is really interesting is that we also had this previous gap, right, coming right here into this 400 level also as a possible level of resistance. So we had the pullback, And there was nothing wrong with that pullback. That pullback was just an oversold pullback from my perspective and from the price action that we're seeing. You can see that we find some support at that 30 daily moving average. You can also see that the trend oscillator was right into support, so that increases the probability of a continuation to the upside after the bounce. And you can see that we have a squeeze that is pointing to the upside. So the expectation for the SPY is to see more strength, right? The first level that I'm going to be watching is this 1272 extension measured from this high right here to this low right here. That is coming somewhere around 404. That's going to be the first level that I'm gonna be watching as a possible level of resistance, because remember that the market doesn't tend to just move to the upside straight up, right? We tend to see a pullback. We tend to see a move into the first level of extension. Then we usually see a slight pullback and then a continuation for the ultimate target that is going to be 410, right? So I'm looking for a move all the way back to retest these highs at 410. So the levels in the SPY is going to be 390 as support. The next level of resistance is going to be 404. And then we're going to be looking for 410 as the ultimate level of resistance in the SPY. Then if we take a look at the IWM, we're going to see some similar price action. And we were talking about this for some days right now, probably a couple of weeks. We were talking about a huge move to the upside in the IWM. And we were talking also about this on my Monday video. And we were talking about IWM becoming a little bit extended into that level of resistance. And we mentioned this 200 daily moving average as a possible level of support and an opportunity to get into starting to build some bullish exposure for a continuation to the upside. So we actually had that pullback, which was actually pretty nice to see the price coming all the way back down to the 200 daily moving average. It of course offers some really nice level of support in that trend oscillator, and you can see that we saw instant continuation on Friday. So the expectation right now is going to be also a move to that 1272 extension measured from this high right here and this low right here. And I also have that 1272 extension coincide with the extension measured from this high right here to this low right here. So I love when we tend to see these confluence of levels around Fibonacci, because that tends to be a really important level of resistance. So the expectation is to see some continuation to the upside in the IWM, and the levels that I'm going to be sharing with you is going to be 190 as the first level of resistance, and then of course it's going to be this 180.50 as a level of support. So we need to hold this level for a continuation to the upside in the IWM, and this is actually starting to look like a really nice trade for a continuation. And then finally, let's take a look at the QQQ, which is actually one of the leading indexes at this moment because of the price action. You can see right here that the QQQ actually saw an increase of 2.74% on Friday after the pullback. And we were talking about this in the Twitter community. We were mentioning this 21 exponential and this 30 daily moving average as a possible level of support, and we were also talking about this 0.1618 Fibonacci retracement as a possible level of resistance measured from this high right here all the way to this low right here. And you can see that that's exactly where we saw some resistance in the QQQ, and now this pullback came right into support. You can see that the trend oscillator continues to be above this moving average. That's why the moving average is green, and you can see that the squeeze is starting to fire to the upside, which is actually pretty interesting. And the levels that I'm going to share with you is also going to be that 1.272 Fibonacci extension measured from this high right here all the way to this low right here. So expect to see a little bit of resistance at that level. You can see that we also have a gap that continues to be unfilled somewhere around 286.50. So expect to see a little bit of resistance at those levels. But ultimately, I think that the target is going to be a retest of these highs, or at least a touch of that declining 200 daily moving average. That's going to be for the QQQ. So once again, the levels are going to be 287.50, then that 200, which is kind of a moving target, but I think that is going to be somewhere around 290, and then the level of support is going to be just below this level, somewhere around 275. So that's gonna be it for the video, guys. I think that we just have to keep things super easy, things super in perspective, and understand that we're starting to see a little bit of more continuation to the upside in the indexes, and we're actually seeing some confirmation from the breadth, from the positive breadth that we're seeing under the surface in many of the stocks that are starting to trade. So once again, thank you so much guys for watching, and I will see you on future videos. Bye bye, take care.